Hi everyone, you're welcome to my YouTube channel, Academic World by Mphatlele TL. Today we're looking at one of the interesting subjects, my favorite subject. I enjoy this subject. We are looking at accounting for grade 12 learners. And we are going to look at, the focus is on the notes of the financial statement. This is what we'll be looking at today. Notes of the financial statement. They do appear more often in the previous paper. If you were to look on question 3, company financial statement and audit report, if you were to look at question 3.1.2 here, question 3.1.2 here, it says prepare the retained income note. And I've seen this question more often in the previous exam papers. So guys, you should know how to prepare the retained income note. So today's topic is on the notes of the financial statement. Hopefully I will be able to prepare many of those notes. If I fail, I should be able to prepare retained income note and the ordinary share capital note. These two notes is like they are the beloved of the examiners. So let's go, guys. Actually, what is note? When we talk about the notes of the financial statement, what are we talking about? The reason many grade 12 learners says balance sheet is difficult is because they cannot prepare notes of the financial statement. If you really understand how to prepare notes of the financial statement, you cannot fail to prepare balance sheet, meaning that a strong understanding of notes of the financial statement will give you a strong understanding of balance sheet. Let me show you something. I will just write this side. Let's say the examiner says, prepare for me fixed asset note. Fixed asset note. Now, this fixed asset note, how is it going to be useful to us? We know that when we prepare fixed asset note, the figure that we get from the note should go to the balance sheet. Actually, we no longer use the term balance sheet. Nowadays, we say statement of financial position. So when you prepare, I'll just look at the small structure of balance sheet. Let me say a statement of financial position is balance sheet, guys. This is, let me say, statement of financial position. I'm talking about balance sheet. Now let me say assets. This is how we prepare this statement. We start with assets, then we will say non-current assets. And on non-current asset, we know that we are going to find fixed assets. Fixed assets. So in balance sheet, we do find fixed assets. So when you are required to prepare fixed asset note, let's say here you prepare fixed asset note and you realize that the figure that you get from the note, the figure at the end of the year that you get from note, let's say is 25,000. It means that in balance sheet, on fixed asset, you are going to write 25,000. So you can see there is a huge relationship between the note and the statement itself. So what you get from the note, you will take it to the financial statement. So if you prepare retained income note, if you prepare retained income note, you get 30,000. Let's say you get 30,000 from this note when you prepare note. It means that in the balance sheet, when we come to retained income, we should find 30,000. So notes is very, very important. It gives you the idea of how much you are going to find in the statement. So we are going to prepare retained income note for this question. I will write here first, then I will go to the answer book. Retained income note. The examiner wants us to prepare retained income note, accounting, November 2015. So when they want retained income note, yes? Okay. They want retained income note, right, guys? So we have to know for which year are we presenting our notes. When we do accounting, we have to take into consideration the financial year end. You are saying I must prepare the retained income note, examiner, right? But for which year am I preparing this retained income note? Now we have to come to the question and we realize that we are preparing retained income note for the year ending 30 June 2015. So we prepare retained income note. I love the year end so much in accounting. I will just say for the year ended, for year end 30 June 2015. So we are going to prepare retained income for the year ending 30 June 2015. Let's start with this note, guys. In accounting, most of the time when we prepare notes or when we prepare the account, we have to start with the balance at the beginning of the year. So what I'm going to say balance at the beginning of the year. How much balance was there of retained income at the beginning of the year? So balance at the beginning year. What is the beginning of our financial statement? Since we know that the year end is 30 June 2015. When did the financial statement start? The financial statement started on 1 July 2014. 1 July 2014. I want to write the amount of the balance at the beginning of the year here. Just know what the beginning of the year is 1 July 2014. So let's start with the balance at the beginning of the year. Let's search for it. The balance of retained income at the beginning of the year. You can see already here they say retained income 1 July 2014. Retained income 1 July 2014. It means that this is the balance at the beginning of the year. And how much is it? It's 2,700,000. So you write balance at the beginning of the year. You write 2,700,000. So in accounting, when you prepare notes, you should start with figures at the beginning of the year. That is my balance at the beginning of the year of retained income. And then now, since we wrote the balance at the beginning of the year, now we are going to focus on what happened during the year, the transaction that affect our balance, which occurred during the year. Now, we know that we are going to now record net profit after tax. Net profit after tax. So is the balance at the beginning of the year? Then we are going to write net profit after tax. So the question is, how much is net profit after tax? I want to show you something, guys. If you look at question 3.1.1, they say calculate correct net profit after tax. Calculate the correct net profit after tax is 13 marks. So since my topic was only focusing on the notes, I didn't want to teach notes and also teach you how to calculate the correct net profit at the same time. Today's focus is on the notes. So I will just take the figure from the memorandum, which the figure is 1,750,000, guys. If we were to answer 3.1.1, we were going to get 1,750,000. Actually, this is the correct answer. So, but with net profit after tax, in this case, uh, there is no way you can get wrong for writing this one, because it will depend on how much did you get on question 3.1.1. On 3.1, if you got correct net profit, if you calculated net profit after tax, and on 3.1.1 you said net profit after tax is 45,000, it means even here you should write 45,000. So that's why I'm saying it's a highly unlikely to get the wrong answer here. I mean, to get wrong, or to, like, the amount that you put here, most likely it will be right only if it comes from the answer which you got from 3.1.1. So we are going to write net profit after tax. I copied it from the memorandum. It was 1,750,000. I didn't want to calculate it because my focus is on the notes of the financial statement. We are going to talk about this one in other videos. Now, after net profit after tax, another thing that will affect the retained income is ordinary share dividends. Ordinary share dividends. And when we talk about ordinary share dividends, we know that we talk about the interim and the final. Some say recommended. So we are going to subtract ordinary share dividend, guys. And ordinary share dividend is made up of two elements. It's made up of interim dividend and final dividend. So when we say ordinary share dividend, this one is very, very, very important. Ordinary share dividend is made up of interim dividend and final dividend. And guys, do not confuse what we call ordinary share dividend and shareholders for dividends. Shareholders for dividend. They are two separate things. We have got what we call ordinary share dividend, and we have got shareholders for dividend. What we are looking at now, we are looking at ordinary share dividend. Is the one that affects our retained income. And we are saying ordinary share dividend is the interim and the final. So what are we talking about actually when we talk about the dividend? The dividend is the amount which the shareholder, because it's the owners of the company, is the amount that they will get. Actually, is the amount they get because of the shares that they have in the company. If you own shares, you must get dividend from the company. So, and we are saying this dividend is interim and final. How does the two differ? How does the interim dividend differ with the final dividend? What is interim dividend? What is final dividend? The interim dividend is the dividend which is declared during the year and is already paid. Let me just say interim dividend. This one is declared during the year. Declared during the year. And it's already paid in our financial year. So, which means that if we declare dividend for this year, 30 June 2015, if there is a dividend that is declared during the year, that dividend, we are going to consider it as interim dividend. And when we declare dividend during the year, we normally pay it during the year. So this one is already paid by the company. Paid to who? To the shareholders. Why? Because they are the owners of the company. They own shares in the company. So guys, please remember that interim dividend is declared during the year. Any period during the year. Remember, our financial year in this case is 1 July 2014 to when? To 30 June 2015. Our financial year starts on the 1st of July and end on 30 June. So when the business declared dividend in any period during the year, it can be August, September. If it's declared during the year, it's going to be interim dividend, and it's declared during the year and it's already paid. Let's look at final dividend. When we talk about dividend, final dividend is declared at the end of the financial year. So in this case, since our financial year is 30 June 2015, I expect the company to declare final dividend on 30 June 2015. Is declared during the financial year. Not during is declared, sorry for that, is declared at the end of the financial year. So if our financial year end on December, the final dividend will be declared on December. So in this case, our financial year end on 30 June 2015. So final dividend will be declared on 30 June 2015 at the end of the year. Do you see the difference between interim and final? Interim is declared during the year, and this dividend is already paid to the shareholders. By the end of the year, it will have been already paid to the shareholders. Final dividend is only declared at the end of the year, and it is not yet paid to the shareholders. When we talk about final dividend, actually we are owing the shareholders. It's like when we declare a final dividend at the end of the financial year. It's like we are promising the shareholders, we say, we are going to give you this much, but we have not yet paid. I have to emphasize on this one, guys. Interim is declared during the year, and it will be already paid. By the end of the year, shareholders will have already got this dividend. Final dividend, we declare it as a company, we declare it at the end of the year, and by the end of the year, it is not yet paid. We still owe the shareholders. So the final dividend is a liability. We owe the shareholders. It's a liability. I expect to see it in notes such as trade and other payables. And final dividend, since we owe it to the shareholders, you can now relate final dividend, very interesting accounting. You can relate final dividend to what? To shareholders for dividend. When we talk about shareholders for dividend, we talk about the dividend that we owe to the shareholders. It's like, how much do we owe to the shareholders? When we talk about shareholders for dividend, do you get the concept? Shareholders for dividend is how much do we owe to the shareholders? Ordinary share dividend is the dividend that we are declaring. It does not focus on how much we owe. It's how much we're saying we are giving to the shareholder. Ordinary share dividend is made up of interim and final dividend. So when we prepare retained income note, we should see the interim dividend, and we should also see the final dividend. Let's go on the question and see how much is the interim dividend and how much is the final dividend. Did we have an interim dividend? Let's read through our question. we look for interim dividend and we keep going down. Yeah, on C they are talking about dividend and shares. Interim dividend of 500,000 were paid on 31 December 2014. You can see about 31 December 2014 is during the financial year. A financial year starts on 1 July 2014 and on June 2015. So if you can look, December 2014 is between the beginning of the year and the end of the year. So we say this is during the year. So interim dividend of 500,000 was declared during the year and it's already paid. I like this examiner because it's saying it's paid. So 500, is it 500,000? If I don't see it, you can't see it. Oh my God, it's 600,000, guys. So we have got interim dividend of 600,000. My work is no longer neat. You'll forgive me for that. Just follow through the accounting concept. The interim dividend, we're going to write 600,000. Now I really need your attention because if you don't pay attention, I will lose you. We go to the final dividend now, which can be very tricky. Let's go and see what are they saying about the final dividend. On adjustment C, directors declared a final dividend of 22 cents per share on 30 June 2015. I like that because final dividend should be declared at the end of the year. You see, 30 June 2015 is at the end of the year. So a final dividend of 22 cents per share. 22 cents per share, which means that for every share that you have as a shareholder, you are going to get 22 cents. If you have get 2 shares, you are going to get 22 cents twice. The final dividend in this case is depending actually in all the cases, final dividend will depend on the shares. So here they are saying 22 cents per share. If you have 500,000 shares in the company, it means you are going to get 22 cents. I mean, you are going to get 500,000 22 cents. Yes, you are going to get 522 cents, meaning you are going to get 22 cents 500,000 times if you've got 500,000 shares. So final dividend is depend on the number of shares. So it's very, very, very important now. Again, we are saying, for now we are saying, okay, a final dividend of 22 cents per share. Let me write this one here, 22 cents per share. 22 cents per share. Guys, I have to pause the video and look for cash. Okay, guys, this issue of final dividend is very important and I don't want to miss it. I want to make sure that you understand. They are saying they declared 22 cents per share, which means that for every share that the shareholder owns, is going to get 22 cents for every share. Let me say, let's make it simple like this. Let's say the shareholder has got 2 shares in the company. Then the statement says you get 22 cents per share. So it means that you are going to get 22 cents for one of the share, and you get 22 cents again for another share, meaning that for every share that you have, you get 22 cents. If you have got 4 shares, it means you are going to get 22 cents 4 times. 22 cents for the one of the share that you have, another 22 cents for one of the share that you have, another 22 cents for one of the share that you have, another 22 cents for one of the share that you have, and that's all you can get. You can get 22 cents for 4 times. So now, since we see that the final dividend is dependent on the number of shares, we have to figure out on the day the shares was declared, how many shares was there. On the day the dividend was declared, how many shares was there. on the day of declaration, how many shares was in issue. It's very, very important. So we are going to calculate the number of shares that was on issue on the day the dividend was declared. Do you still remember when the dividend was declared? I mean the final dividend. It's easy because the final dividend should be declared at the end of the year. So it means the day the dividend was declared was on 30 June 2015. So we have to calculate how many shares was there on 30 June 2015. So we're going to go to our question. I think it was adjustment C. Yes, adjustment C. Let's read where they talk about share capital. You can see they say 1 July 2014. This is the beginning of the year, guys. 1 July 2014, the company had issued 3 million shares. So at the beginning, the company issued 3 million shares. And then on 15 August 2014, 1 million new shares were issued. So on this day, another shares were issued. We call them additional shares. How many shares? 1 million shares. On 31 May 2015, 20,000 shares were repurchased. This was repurchased before the financial year end. And you have to be very, very, very careful when it comes to share buyback. Let's go and hear what are they saying about share buyback. They say were repurchased at 250 each from an existing shareholder. This has not been recorded. This has not been recorded, meaning that 20,000 shares that were repurchased has not been recorded. I wanted to check if the shares that we bought back qualify for final dividend. It's very, very, very important to know if the shares that we bought back qualify for final dividend. So I'm going to go back where they talked about final dividend. Yes. They say share repurchased do not qualify for final dividend. So they do not qualify. We take them out. We are going to say subtract 20,000. If the shares that we bought back do not qualify for final dividend, take them out when you are calculating final dividend. So actually we are going to say 3 million plus 1 million minus 20,000. You will know how many shares was there at the end. Look at these shares. Was there at the beginning? These shares were added during the year, and these were bought back. And they do not qualify, so we have to take them out. Do not qualify. When shares that we bought back do not qualify, we take them out when we are calculating final dividend. Please guys. So how many shares was there? I'm going to say 4 million. 4 million is 3 million plus 1 million, guys. 4 million. 1, 2, 3. 1, 2, 3. 4 million minus 20,000 is 3,980,000. 3,980,000. Now it's easy to calculate the final dividend because it depends on this number of shares. So we're going to say 22 cents. This is how I write 22 cents. To me, it's 22 over 100. You can say 0.22, it's fine. Then 22 cents depending on 3,980,000. It was very important to know how many shares was there at the end of the year. So final dividend depend on the number of shares. So I'm going to say 3,980,000 times 22 divided by 100. You get 87,5,600. This is your final dividend. So let's go and record final dividend. It's 875. 875 600. My work is not neat at all. So hopefully guys you are following, but I will still go to the answer book. I think there everything will be neat. Now, so this is how we prepare retained income note. Let's recap. We start with the balance at the beginning of the year, the balance of retained income. You find it in the financial statement, list of balances. Here it was 2,700,000. Here it is, and then after when you say balance at the beginning of the year, after balance at the beginning of the year, you record net profit after tax. Then after recording net profit after tax, you are going to record ordinary share dividend. And ordinary share dividend, it should be interim plus final. So I have to add these two. Interim is 600,000. Final is 875 600. So I have to add these two. Let me say 600,000 plus 875 600. I'm getting 1,475,600. This is the ordinary share dividend. It should be subtracted when we prepare the retained income note. It should be subtracted. Another thing, one more last on this note is a share buyback. Another thing that we have to record is a share buyback. So I'm going to record share buyback. And very important, you have to pay attention now. Listen very, very, very carefully. When we record share buyback on the retained income, we have to use a price which is above the average share price. Wow. Guys, you have to be very careful. You have to know your stuff. When we record share buyback in the retained income note, we use the price which is above average share price. Okay, let me say, let's go and look at the question a little bit. We want to see when we were buying shares, for at which price did we buy back these shares. We are going to look at the price we used to buy back shares. 20,000 shares were repurchased at 250, right? It's very tempting to say share buyback is 20,000 times 250. It's very tempting. It's not correct accounting. It's very tempting to say 20,000 times 250 and you get the value of share buyback. Yes, we bought back 20,000 shares. We know that we have to multiply this 20,000 shares with a price. But the price that we use, it should be the price which is above the average share price. So you can hear I'm saying the price above average share price. So we have to calculate, we have to figure out how much is the average share price. Let me just give you this example, guys. Let me say we bought back these shares at 250, and when we were calculating average share price, we bought back, let me say price of buying back. I don't have to rush here because I need you to understand. Price of buying back is 250. We bought back the shares at 250, and then let's say the average share price. I will still talk about average share price, how to calculate it. Let me say average share price is 2 rand. When we record share buyback in the retained income, we use the price which is above average share price. Average share price is 2 rand. How much is above average share price? Is 50. Hopefully you understand this. The average share price is 2 rand. Nah? So when the average share price is 2 rand, whereas we bought the shares back at 2 rand 50, we see that the only amount that is above average share price is only 50%. Or you can say the difference between these two. You can say 250 minus 2. You realize that 0.5%. This is accounting, guys. This is accounting. I wish you understand this one. I want to talk a bit about share buyback. Let me not rush, because I have to teach you guys. I have to show you these things, how these things are done. You have to get them. Recording share buyback is very, very, very important. The transaction of share buyback is very, very important. And the share buyback affect these two nodes. It affects retained income node. I will just say RI for now. It affects retained income node. And when we record share buyback on retained income node, I said we use the price above average share price. Another note where we record share buyback is ordinary share capital node. Again, share buyback is recorded on ordinary share capital node. And when we record share buyback on ordinary share capital node, we use what we call average share price. We use what we call average share price. So in the example that I provided, I said the average share price is 2 rand, and I said we bought back the shares for how much? For 2 rand 50. The average share price is 2 rand. We bought back the shares for 2 rand 50. Now, when we prepare ordinary share capital node, we use the average share price. The price we bought back the shares is above the average share price. Once we buy back the shares using the price which is above average share price, look how much did we buy each share? We bought it for 2 rand 50 back. Because this price that we used is above average share price, when we prepare ordinary share capital node, we use the average share price. And the remaining part, the difference between 250 and 2, is going to be on retained income. Let me bring another scenario. Let me say we bought back the shares, each share, we bought it back for 3 rand. We're buying back each share for 3 rand. And let me say the average share price is still, the average share price, let me say, is 2 rand. No, I did not want it in this case. Let me say the average share price is 4 rand. The average share price, let me say, it's 4 rand. Guys, I will confuse you here. I'm saying a lot of things. The 3 rand is the price which we bought back the shares. Each share we were buying it using 3 rand. At 3 rand is the buyback price. Now, the average share price, now look in this case, the average share price is above the price of buying back the shares. In this case, we cannot use average share price. Actually, the average share price is only used if the price which we were using to buy back shares is above the average share price. Since the price in this case is not above average share price, we were just going to use friend. This topic we have to talk about it in other videos. Keep watching my videos, guys. We will simplify these things. So in this case, I said the share buyback on the retained income note is recorded using the price above the average share price. So it's very important to know how to calculate average share price. Average share price. How do we calculate the average share price? We say available funds divide by number of shares, or we can say the capital raised divided by number of shares. Let's calculate average share price together, guys. Calculating average share price is very important. You have to know how to calculate the average share price. You say available funds over the number of shares. I want you to see it in this way. You can say the price, not the price, let me say the value of shares. You can also see it this way: the value of shares divided by number of shares. So let's go to the question and calculate average share price. Let's see what we were supposed to do in this case. If we go to shares, transaction C, we see that I think I will have to write here. Let me just wrap here. I will need to write here. We want to calculate, very important, we want to calculate average share price. So we say available funds, or the capital that we have at the beginning of the year. The company had issued 3 million shares, and the value of these 3 million shares is 3,900,000. So on the numerator, we are going to have something like this. On numerator, on top of my line, we are going to focus on the values of shares. So at the beginning is 3,900,000. Don't write shares, but write the values. These are the number of shares, and this is the value of shares. So on top, we focus on the value. We had 3 million shares at the beginning. How much did these 3 million shares worth? 3,900,000. We write it down. We add, we issued shares during the year. These are the additional shares. 1 million new shares were issued at how much? 170. And those shares worth how much? 1,700,000. So you add 1,700,000. So on top, you focus on the values, not number of shares. It is 3,900,000. Is 1,700,000. Now underneath, that's where you write number of shares. Here at the beginning, the number of shares is 3 million. And on the additional shares issued, number of shares is 1 million. So what you get here, it should be the average share price. So let me press my calculator. 3,900,000 plus 1,700,000 divided by 3 million plus 1 million. 1,4. So the average share price, sorry for that, guys, the average share price is 1,4. So we calculated the average share price it's 1,4. And then we also know for how much did we buy each share back. We bought each share back using 250. So I have these two figures. I have the average share price. I have the price of buying back. The price of buy back. So now, since the price of buying back shares is above average share price, we have to look by how much it's above. So we look at the difference. We say 2,50 minus 1,4. So we say 2,5. We're going to say 2,5 minus 1,4. We want to know how much is above 1,4. It's 1,1. So it means this price is above the average share price. Is the one that we use when we prepare the retained income note. So here on the share buyback, we're going to say we bought 20,000 shares. Which price do we use? We use the price above the average share price. It was 1,1. So you say, well, 20,000 times 1,1 is 22,000. So guys, and then this amount of share buyback should be subtracted. So I'm going to simplify everything that we talked about using the answer book. We are going to look at the answer book to simplify everything that we were talking about. So let's go. Do I have the answer book here? I should have one. I know I've played the answer. Yes. Which question was that? You see Mr. Patel now? Oh, but we'll just see what this answer book is for retained income. Let me just come and check. Yeah, this is the retained income note, guys. We had balance at the beginning of the year. They already wrote it, 2,700,000. What else must we write? We write net profit after tax. Net profit after tax. It was 1,750,000. And then what else? It means we have to write share buyback here. How many shares did we buy back? 20,000 shares. And we used the price which was above the average share price. It was 1,1. Dividends. Dividends, they are talking about ordinary share dividend. We know that it is interim. And it is final. So how much was the, this one is 22,000. How much was our interim dividend? How much was the interim dividend, guys? I can see some workings here. It should be here. It was 600,000, whereas the final dividend was 875,600. 875,600. 600,000. So we had interim was how much? 600,000. Final was 875,600. We already talked about how we calculate these things, guys. So you add them, you get the dividend. So 600,000 plus 875,600, 1,475,600. We have to know which one are in brackets. The share buyback is in brackets. The dividend should be in bracket as well. So now to calculate the balance at the end of the year, you are going to say 2,700,000, add this one, less share buyback, less dividend, and you get net profit at the end of the year. So adding, guys, should not be difficult. You just take calculator, you say this one, you add this one, you subtract this one, you subtract the dividend. Now, I want to say something about this retained income. Guys, when we prepare things in accounting, when we prepare notes, or maybe when we prepare whatever that we are preparing, in this case we are preparing note of retained income, we have to know what is a retained income. Don't just prepare things that you don't know. You have to know what is a retained income. When we talk about retained income, what are we talking about? A retained income is the income the business is the income we keep for the growth of the business. The income that we keep for the growth of the business. It means if let's say you make a profit of 20,000, you own a business, you make a profit of 20,000. Guys, you don't eat the whole profit, or else your business will not grow. For your business to grow, you have to say to keep some money for the business. So that is what we call retained income, the income that we keep for the business. So the income that was there at the beginning of the year, that was kept for the business, was 2,700,000. Now, why does net profit after tax affect the retained income? It's obvious. It's what? It's profit. So actually what we are doing here, if you look at this is balance at the beginning of the year. Let's see it from net profit after tax until to dividend. Let us see it as the transactions which occur during the year. This one. Let's just say these are the transactions which occur during the year. During the year we make a profit of 1,750,000. Now on this profit there is an amount that we use to buy back shares, which is 22,000. There is another amount that we use to pay dividend. So what we are left with there is a retained income, which you can relate it for during the year. So which means that retained income for during the year is net profit after tax, share buyback minus dividend. Guys, you make a profit, you buy back shares. So from the profit you take out 22,000, and from the profit you take out dividend. It means there should be something that you are left with, the retained income for the year, for during the year. So now we say balance at the beginning of the year, we add net profit, we less share buyback, we less our dividend, we get balance at the end of the year. What is retained income? The income that you keep for the growth of the business. You don't make a profit and you chow everything. No. For the business to grow, you have to keep a certain amount. Guys, I wanted to do the retained income note and the ordinary share capital note, but I'm tired of talking, and I believe we have learned a lot from this note. So I will just leave it here. We will see each other next time. And guys, if you have watched this video and you like it, please subscribe. When you subscribe, you are motivating me to keep making more, to keep sharing knowledge. So make sure that you subscribe, you comment, and you like on my YouTube channel. Thank you so much, guys. May the Lord keep you safe and bless you. See you next time. Hey?